Okay, so we're starting our next unit, and this unit is in chapters 14 and 15. And chapters 14 is the entity chapter. So in this chapter, we'll talk about sole proprietorships, partnerships, limited partnerships, limited liability partnerships, LLCs, and also the franchise as a business model. So that's where we're going with this chapter. For today's lecture, this particular lecture focuses on the sole proprietorship, and the second part of today's lecture, which I'll post in a different file, will focus on the general partnership. So we'll start with those two entities today. Now, for each entity that we discuss, we're going to talk about four main aspects, and these are the ones that I want you to key in on and understand as it relates to each of the entities that we'll discuss in chapter 14. All right. The second chapter we're going to cover in this module is chapter 15, which is solely devoted to the corporation. All right. And the reason the corporate form of ownership gets its own chapter is because they're so big and so all-encompassing, and they really are the largest businesses that exist in society today. So that's how we'll proceed through this unit. Okay, so for the entities that we'll talk about, the four things that we're going to discuss and that we want to have command of are the ease of creation, owner's liability. All right, now these two tend to have an inverse relationship. So the easier it is to create an entity, generally the less favorable the owner's liability when the business is sued. So that's the relationship there, and we'll go deeper into that. Tax considerations. For our purposes, very high level, we're going to talk about how the entities are taxed and ability to raise capital, right? The old saying goes, it takes money to make money, and some entities are more attractive as it relates to raising capital, getting loans, getting investors, issuing bonds, and the like. All right, so we'll move on. Okay. So the first type of business that we'll discuss is called a sole proprietorship. All right. In a sole proprietorship, the individual owner is the business itself. All right. And if you've ever had the opportunity to fill out tax form, or even look at a tax form, there's a space for W-2 earnings, i.e. earnings as an employee, and then there's a space for income generated from one's own business, right? So the sole proprietorship is taxed as an extension of the owner. All right, you put any income earned right on your 1040 tax return, and you can pay your taxes on it there. So let's talk about the advantages of a sole proprietorship. And really, the advantages are, it's a default organization, which means if I just start operating a business, it's a sole proprietorship. It's easy and very cheap to start. You just start selling something, right? That doesn't mean you would not have to comply with local licensing laws or whatever, but you don't have to take a step to create the entity. All right, and they're very flexible, right? Because the owner controls everything, right? And at the end of the day, the owner keeps whatever he or she has generated profit-wise. Of course, you do have to report that income and pay taxes on it. Now, let's talk about the disadvantages. All right. Obviously, the owner is responsible for all losses. So if the business is not profitable, or if the business is otherwise sued, the owner is responsible for that. So we have um, unlimited personal liability. All right. That means if my business is sued, I'm responsible. And for instance, let's say I buy a van and start selling ice cream. All right. So I'm operating as a sole proprietor. All right. And let's say my business is I buy ice cream wholesale from a wholesaler or Sam's Club, and then I sell it piecemeal and on an individual basis. All right. Well, let's say I get some contaminated ice cream, and I didn't make the ice cream, I didn't manufacture it, but I'm going to be sued. All right. And we know that from the previous chapter. That's product liability. I was the retailer. I could be sued. Right. And if I am sued, everything I personally own can be attached to that lawsuit, which means there's nothing that's off limits. If I own a home, if I have cash in personal bank accounts, if I own a car, anything that I have could be attached. And that's a big drawback, because literally with every single transaction, the sole proprietor puts everything that they own on the line. All right, so that's the biggest disadvantage, and that's the reason that this is not a ideal choice for the small business owner. All right. Another disadvantage, it's difficult to raise capital. If you walk into a sole proprietor, particularly as a new sole proprietor, you walk into a bank and ask for a loan, the bank may not make the loan. You know, they're going to be interested in the owner's personal credit history, but they're not going to lend substantial amounts of money for that reason. Okay, so that's the basics of the sole proprietorship.